Hello everyone, welcome to this new video on Activities. Today we're going to talk about NVIDIA and we're going to analyze their stock, their business and their leadership. I'd like to start with a minor disclaimer. As you can see, it's very small. The information provided in this video is for general informational purposes only and should not be considered as financial or investment advice. I do not provide personalized financial investment, tax, or legal advice. Any reliance you place on such information is strictly at your own risk. I'm not liable for any losses or damages in connection with the use of the information provided. Before making any financial decisions or investments, it is recommended to consult with a qualified financial advisor or professional who can assess your individual financial situation and provide guidance tailored to your specific needs. I strive to ensure that the information provided is accurate and up to date. However, I do not guarantee the accuracy, completeness, or reliability of any information contained herein. Please be aware that investing in financial markets involves risks, and past performance is not indicative of future result. Market conditions can change rapidly and unpredictably. By watching this video, you acknowledge and agree to the terms of this disclaimer. So, I hope you guys didn't click away, and we'll get right to it. So index, or basically what are we going to talk about today? NVIDIA's business and a bit about its history, NVIDIA's leadership, the financials, and eventually a final verdict. Also, if you find these videos helpful, and if you want to support a small channel, then please leave a like and subscribe. It helps me a lot. After all, I'm a very small channel, so every like, every subscribe that I get is very much appreciated. And every time that I check my channel and I see that the subscribe number or the like number has gone up, I get very excited and I really appreciate it. So thank you very much, and also thank you very much for watching the video and for your attention. So NVIDIA's business. We're going to talk about graphics cards, cloud and data center, networking, and artificial intelligence. But first, a bit about NVIDIA's history. It's headquartered in Santa Clara, US. That's right now. It was founded on the 5th of April 1993, and it has 26,000 employees. The company was founded after a meeting in a Denny's. This is the Denny's, just so you get a general idea. So, NVIDIA's business. Now that we've got the history out of the way, I want to talk about the business. And probably the first thing that you think of is graphics card. At least I think if you're a consumer, the first thing that would come to mind whenever someone talks about NVIDIA would be graphics cards, or GPUs in short. So what does a graphics card do? It does image processing and computer graphics tasks, but it also has non-graphical applications like cryptocurrency mining, training neural networks, and embarrassingly parallel problems. And if we look at NVIDIA's graphics card, we can see that NVIDIA has the strongest graphics card out of all. I listed the source here in the left bottom corner of the slide, so you can look at it yourself, but I mean, GPUs, or NVIDIA's consumer GPUs, are just beating it. They're absolutely beating AMD out of the market, and AMD is not even close. Now, of course, if you look at price to performance, then NVIDIA's graphics cards aren't that impressive, because their best graphics cards that are beating AMD's are also the most expensive ones. But I still wanted to point this fact out, because it does still show that NVIDIA's performance, even in just the extreme spectrum, is just way higher than AMD's. Then we go and look at the cloud and data center of NVIDIA, which is an incredibly large business, but I'll show you that. I will show you guys that later in the presentation or in the video. Provides the hardware and software to run cloud and data centers. NVIDIA's Grasshopper 200 superchip, faster than any other ever before. These superchips are also used to train large language models and general high-performance computing tasks. So what is a large language model? Well, or an LLM in short, is like ChatGPT or like a Google Bard. It's just where you input something and the language model puts something out, and hopefully it's appropriate to what you put in. And when we talk about in networking, NVIDIA also is the first in DPUs. Or at least, well, I don't necessarily mean first in time, but the best. I mean, they're the best in DPUs. And this was a bit confusing to me because I'm a little bit tech savvy and understand what a CPU and a GPU does. But what does a DPU do? Well, the DPU is essentially designed to process data moving around the data center. It focuses on data transfer, data reduction, data security, and powering data analytics, as well as encryption and compression. This means it supports more efficient data storage and frees up the CPU to focus on application processing. So basically, it just makes the entire data center a lot more efficient. So you could definitely say it's very essential to a data center because running these data centers is extremely expensive. So every little bit you can save, every little bit that can make a data center more efficient, will in the long run really save you millions, if not billions of dollars. And NVIDIA also offers the NVIDIA Bluefield networking platform. So NVIDIA, in terms of networking and cloud and data centers, offers DPUs, IPUs, SuperNICs, SmartNICs, and what you could kind of conclude from this is that NVIDIA offers essential hardware for cloud and data centers, as well as the hardware necessary for high computing tasks that are really demanding, like LLMs, large language models. Then if you go to artificial intelligence, then quickly you start to see that these fields overlap. NVIDIA offers AI software as well as AI hardware to businesses. So NVIDIA has been the first in the AI game, like circa 10-20 years ago, I think I read. So they've been in this game for quite some time already. And the thing is that AI runs on thousands of GPUs. Reportedly, OpenAI's ChatGPT was trained on 10,000 GPUs. And I also read some stories, and don't quote me on it, but I also believe I read online, and if I do remember or find the URL of the website that claimed it, I'll put it down somewhere in the description or in the comments. But I believe I read the ChatGPT right now runs on 20,000 GPUs and is projected to run on 30,000 in the future. And given that these H100s GPUs approximately cost between 15 and 40K, that's not confirmed, but that's what the industry executives report, you could see how it could quickly turn into millions of dollars, hundreds of millions. And especially when NVIDIA releases the GH200 and the H200 GPUs and the Grasshopper 200, then yeah, we would really start to see that NVIDIA could generate a lot of revenue and probably a lot of profit from this business. So NVIDIA's main business comes from cloud computing and data centers and artificial intelligence, where analysts expect cloud and AI to grow with about 16% per year for the upcoming, I believe it's about 7 years, till like 2030. So if we look at the main growth in revenue terms, you see this once again, and that is, and I'll get my laser pointer here, is that really any business of NVIDIA, like gaming, hasn't been doing too well. Neither has professional visualization. Auto is growing, but not to a really large section of their business. OEM and other has been in decline. So the only real big part is cloud and data center, and in addition to that, of course, AI, because AI also relies on these large data centers. So, and those were the two, that was basically the business section that did really well in Q3 and Q2. So right now we're waiting, or basically I think most analysts are waiting, what are the reports for Q4? And we want, of course, to see year end, because we've seen these enormous growth, right? I mean, from here it's like a 2.5x, and then from here it's like 40% up in a quarter. In a quarter, that's quarter on quarter. Remember that, right? If you look at a year on year, then this Q3 14,000 and 3,000, you can quickly start to see that's about what? It's like 3.5x or something. So you can quickly start to see that there's a lot of growth potential here. So what we'll mainly like to see is this growth to continue and hopefully even speed up, but we'll have to see that. So that's why I really wanted to more or less talk about the data and cloud centers, because that's the more interesting business part. You know, the gaming, sure, it's usually what most consumers get in touch with, but the cloud and data centers are really the parts of the business that are really, really profitable. And this comes with some threats, and that is that people are claiming, first of all, AI is a bubble, and that there also is competition coming from mainly AMD and trade wars. So if you look at the bubble part, and I think the Goldman Sachs link is a very good one to read. It talks about how AI stocks currently aren't yet in a bubble because they're simply not as overvalued as companies were during the Nifty 50 bubble in the 60s or the internet bubble in the 2000s, right? And what it basically says is not only are the leading tech companies less extreme in valuation today, but the broader optimism that spilled over into equity valuations in the late 1990s is not apparent today. And I don't know about that last part because optimism, I don't know, maybe they're talking about the whole recession part and the Fed rates. That could be. I don't know really what they're talking about. But if we're talking about tech stocks, I would say tech stocks are in a pretty optimistic position here. Also, what it did kind of give as a counterpoint is that a study that looked at 51 major tech innovations from 1825 to 2000 found investment bubbles were evident in 73% of the cases. So that's pretty big. So there's a higher likelihood that this is a bubble than that it isn't. Now, of course, still that's 27% chance that there isn't. So that's still also some decent chance that it isn't a bubble. So basically, it's difficult to say if NVIDIA is in a bubble. For that, we will have to look deeper into the financials. And if we talk about AMD, AMD offers, and as I already said, they're going to offer, they plan on offering a cheaper alternative to NVIDIA with the MI300 series. And this is really something AMD does very well. AMD knows that on just a sheer performance spectrum or sheer performance scale, it cannot compete with NVIDIA. It simply can't. It doesn't have the manpower or capital to do so. So what they're going to do is they're going to offer a cheaper alternative that's arguably in performance-wise that it's worse, but it's cheaper and way cheaper. And Microsoft has announced to use the new AMD alternative when available. So that's a very good sign for AMD and very bad, of course, for NVIDIA. But as a counterpoint to that is that NVIDIA is coming up with new H200 chips and has an excellent software programming language package called CUDA. AMD offers an arguably worse alternative called ROCm, or ROCm, however you want to pronounce it. And the thing with these software packages is that usually the same as in with cloud businesses, is that they have a very long business frame or like a very long subscription phase, and it's very difficult for companies to go from one to another. So once you have companies or consumers or well, basically just customers tied into such a plan, you'll very likely have them for the upcoming time. And the thing with that is that NVIDIA already has a large market share, between 80 to 95% of the AI chip market. So combine that with the fact that these contracts have a long duration and companies are very unlikely to actually switch to a different provider, then that puts AMD in quite a tough spot, because that would say that NVIDIA basically has, a very strong position here. Also, AMD is competing with Intel on the CPU spectrum and NVIDIA on the GPU fields, right? So where NVIDIA is only competing with AMD. So NVIDIA is only competing with AMD, and we could arguably say that even that's not really happening because NVIDIA is providing way better chips to a way larger market, which is already locked in contracts. And AMD is competing with NVIDIA, but also with Intel on the CPU part. Now, of course, NVIDIA as well is coming in with the Grasshopper 200, which also has a CPU part. So the last point, it's debatable, but at least the whole contract duration part and the fact that NVIDIA has a huge market share just tells me that the AMD threat is not really there. I wouldn't be too afraid of AMD if I were NVIDIA. I just continue doing my thing, innovating, producing the best chips, and I wouldn't really see AMD as a big threat. And then if we talk about trade wars, and that is actually a big question mark, and that is the Chinese chip ban, for example, is that as you can see here in the article, is that US tells NVIDIA to halt shipping some AI chips to China immediately. The US doesn't want China to have these chips. Because what does China do? China tries to remake them. They try to reverse engineer it. They try to make lookalikes that should perform as well. And the US doesn't want them to have these powerful chips to make powerful software, powerful hardware, which can be used for cyber attacks and whatnot against the US or its allies. So the US doesn't want NVIDIA to provide these chips to China. Now, Chinese companies account for 20% of NVIDIA's revenues. That's quite a big part. So if that were cut off tomorrow, NVIDIA would have a serious problem. Because then suddenly they lack 1/5 of the revenue. And yeah, that's a pretty bad thing. And the US is ramping it up because tensions in the geopolitical world are rising. So this is something you actually have to keep an eye on, and you shouldn't lose out of your sights because this is actually a decent threat. This is something I understand that people are worried about. Then, if you look at adoption, I thought it was just a really interesting thing to talk about. Because I saw this in the NVIDIA NVIDIA investor presentation, is that the NVIDIA talks about waves of adoption of accelerated computing. And according to NVIDIA, and they haven't directly said this, but this is kind of what they're hinting at least, or what I'm getting at, is that very likely they're about this phase, where cloud service providers are buying the chips, obviously, consumer internet as well, and enterprises are just getting started. Right? And enterprises, big Fortune 500 companies are just starting to use AI. So what I'm getting at is that very likely NVIDIA is saying that they're over here. We're in this phase of the adoption. We got this much more to go regarding accelerated computing. So we have a lot of growth potential. That's basically what NVIDIA is saying. So if we recap that, what is NVIDIA's business? Data center and cloud computing, AI and data science, design and simulation, high performance computing, gaming, automotive, robotics, and edge computing. Basically, technology. But the main part of its business, the main part of the valuation of the company right now is in its data center and cloud computing and its AI and data science sections. Those are the parts that are really driving up the share price currently. And for rightful reasons. I mean, they offer the best chips. AMD doesn't have an adequate response to NVIDIA's chips. So everyone that is currently in the AI boom needs to go to NVIDIA for chips. They simply don't have a choice. So NVIDIA also has an 80 to 95% market share and therefore is pretty much the leader in AI. It's pretty much the leader. That's just NVIDIA's business currently. They're pretty much the leader of AI with the best chips and largest offering and of course the very advanced software. NVIDIA's leadership. So when we talk about the leadership of NVIDIA, we have a CEO Jensen Huang, CTO Michael Kagan, CFO Khalid Kress, and COO Deborah Sjoquist. Jensen Huang, and I struggled to put all the things on the screen very well, I hope it's clear to read, is the founder and the CEO. Prior to founding NVIDIA, he worked at an AMD. So I actually think that's a very big plus, because that means that he also worked at the competitors, and he does somewhat knows how the competitors work and how the whole field works. He's 60 years old and has about 40 years of experience in the tech sector, of which 30 years is as CEO, and which is of course the CEO of NVIDIA. He has 2 actual degrees. It's a bachelor's and master's of science in electrical engineering, and he has a couple of honorary doctorate degrees. He also has a lot of awards. I've just put the most notable ones on the screen, but he's a lot more. He has a lot more, so you can read all of them on his Wikipedia page. But he has a lot of. To be honest, when we're talking about a tech company, of all the companies that we've currently analyzed, I think that this is probably the best CEO. He has a lot of experience. He has good degrees. He's obviously very smart. He had worked at the competitors. He's the founder as well. And he has a lot of awards. So he's obviously very acknowledged for his work. So I think out of all of the CEOs that we've currently talked about, out of all of those CEOs, I think Jensen Huang is probably the best one. And if we talk about the CTO, he's Michael Kagan. Joined NVIDIA in 2020 after the Mellanox acquisition. He was the founder of Mellanox, or well, basically co-founder, and also CTO there for a very long time. Has 41 years of experience in relevant positions. Also very experienced, very big into tech, and well, just very experienced as well, as the same as Jensen Huang. Colleen Kress, she's the CFO, joined NVIDIA as CFO 13 years ago. Prior to that, she had 25 years of experience in finance. Notable companies, she also worked, prior to working at NVIDIA, she worked 3 years as CFO at Cisco's, and 4 years as CFO of the S&T division at Microsoft. So she has quite some CFO experience, and she's of course very experienced, just very experienced once again. And you know, the thing is, I can keep on saying very experienced, but the thing is that to get into a CFO or CEO or CTO or whatever C-suite position, you have to have a lot of experience. So I can keep on saying that, but in reality, of course, you have a lot of experience once you enter the C-suite. But the thing that I find so notable about all of the CEOs or the C-suite members of NVIDIA is they have a lot of relevant experience. They're obviously very capable, and usually they even have 40 plus years of experience, except Colleen Kress. But once we go to, for example, Deborah Sjoquist, she joined NVIDIA 17 years ago. She's a COO. And she has 45 years of experience in operations. These are people that have a lot of experience, probably a lot more experience. The thing is, for example, Deborah Sjoquist, she has more experience than my age. She has twice the years of experience compared to my age. Alright, and that probably goes for a lot of the people watching, because my YouTube videos reach a very younger audience, I guess adolescents, millennials. So yeah, that's just crazy to think about. These people have so much experience. And if you compare that to AMD's leadership, I must say that NVIDIA's leadership is not that notable. AMD has Lisa Su, Mark Papermaster, Gene Hu, Phil Guido, also just very, very capable leaders with a lot of experience. So the leaderships of NVIDIA and AMD are very much alike. So to say, in short, a lot of relevant experience and a very capable team. Then we go to the financials. And we're going to look at revenue and earnings, R&D expenditure, P/E ratio, ROE, PAG ratio and EPS, operating profit margins, debt current and quick ratio, cash flow, expected growth, DCF model, and multiple valuation. If we look at the revenue of both companies, they're all over the place. They're all over the place, but the same as we saw with the the quarterly graph, or not really graph, the quarterly table, which we saw of NVIDIA's earnings during the NVIDIA business section of this video, you saw that the main growth in NVIDIA's business is in data centers, but also in the last 2 quarters that were reported. So obviously this year, in the trailing 12-month average, they're going to have a lot more revenue. The same goes, of course, for earnings, because that's somewhat tied to revenue, except when we talk about AMD, because AMD's earnings has gone down the drain, and it was mainly caused by a declining gross profit and a rise in operating expenses. The company is getting more expensive to run, or they're spending more at least, especially also for example, spending more on R&D, which is something I do like to see, by the way, but just to note one. And they're making less in gross profit, so either the margins are going down or they're selling less. It's one or the other. Then if you look at R&D expenditure, NVIDIA spends about $8 billion on R&D, and AMD spends about $5-6 billion on R&D. So NVIDIA does spend a lot more, and they always have. But AMD is trying to catch up by having a higher growth. As you can see, year on year they're spending more and more on R&D. At least it's growing faster. And if you look at R&D expenditures percentage of revenue, you can also see that AMD as percentage of revenue, especially in the last year, is spending way more on R&D than NVIDIA. And of course, R&D expenditure for a technology or innovative technology company is very important. But NVIDIA, for the last 4 years, has been spending more and continues to do so very likely in the future. So we'll have to see where that goes, but as of right now, NVIDIA is spending a lot more on R&D. And if we look at the PE, ROE, PEG, and EPS, then we see the trailing PE ratio is just horrific whenever we look at AMD. I don't know what they're doing over there. But forward PE is a little bit more realistic, and forward PE actually on NVIDIA is somewhat acceptable for a growth stock. 71, I would say, is a bit expensive. Return on equity at NVIDIA is tremendous, while on AMD it's of course very bad. And now these earnings, like the TPE and the FPE, that's forward and trailing PE, and the return on equity are very, very low for a reason, and that is that the EPS is very low, the earnings per share, and that is because the earnings have gone down because of their gross profit somewhat declining and their operating expense, getting bigger, and that's because also they've been spending more on R&D. So to now conclude that NVIDIA is a more solid company or it's lower valued is a bit skewed, because AMD has such a high valuation. Technically it's overvalued by a lot because they're spending so much on R&D. And because they're spending so much on R&D, and given they're a tech company, they also have a lot of upward potential, because maybe they'll get the new tech and maybe they'll get the new whatever. If we look at the PEG ratios, PE divided by growth, we can see that NVIDIA is 0.55 and AMD is 2.07. Everything below 1 is really good, because that means that the PE actually grows, that the price to earnings actually grows slower than the growth of the actual company. So a PE ratio below 1 is very, very good, and that's something I really like to see at NVIDIA. I also really want to stress this ratio, because this is the only real ratio that I think is somewhat applicable to growth stocks. At least hyper growth stocks like NVIDIA. Because these other ratios, I think you can of course use them, of course, but I think the PEG ratio is very underrated in general, and I think especially when it comes to hyper growth stocks, the PEG ratio is just very, very important. The EPS at NVIDIA is 7.55 and AMD is 0.10 because of their lower earnings, as I explained earlier. Then margins at AMD, of course, very low, NVIDIA very high. So somewhat these earnings have skewed it, but if you look at the margins, just operating and profit margins, once again you see that NVIDIA is just blasting AMD away. And if you look at debt ratios, we see that NVIDIA has a higher debt ratio than AMD, but AMD has a lower current and quick ratio. So what does that tell us? AMD has a lot more long-term debt, and NVIDIA has a lot more short-term debt. Because the debt ratio at AMD is lower, but for some reason the current ratio is also lower. And if you don't know how they work, debt ratio is basically total debt divided by total assets. And current ratio is basically current assets divided by current liabilities. So they're switched around. So the lower the current ratio is, the worse, and the lower the debt ratio is, the better, technically speaking. So how does this come? Well, because AMD has a lot more long-term debt and NVIDIA has a lot more current debt, or like short-term debt. Quick ratio is somewhat tied to current ratio, so I don't want to go on about that too long. But current and quick ratio at NVIDIA are very high. They're very high for a growth stock, I would say. AMDs are good. I would rather see NVIDIA drop their current and quick ratios a bit, because a current ratio above 2 is very good. But 3.5 for a growth stock? I'd say it's a bit high. I would give this the same criticism as I gave Google. So current ratio and quick ratio at NVIDIA are relatively high. When we're talking about cash flow, free cash flow rating at NVIDIA is 0.93. Free cash flow rating at AMD is 0.71. So NVIDIA's is way higher. As well as operating income is about 10 times as high as AMD's. And free cash flow is about 17 times, about 15 times as high. So it's a lot higher than AMD's. Then if you go to the expected growth, we see that the current EPS is 7.55 at NVIDIA, and 0.10 at AMD. And EPS is growing quite rapidly by analyst estimates, about 1.5x for next year, and then about nearly a double again for the year after that. AMD's analyst estimates are really high. They were basically predicted 25x, so I'm very curious to see how that turns out. But the growth at NVIDIA is estimated to be about 102% per annum for the next 5 years, and the growth in the same time frame is about 12.85% for AMD. At least those are the estimates by analysts, and you can look those up on Yahoo Finance. So if we look at the financials, NVIDIA looks like the superior company. Good ratios, high margins, decent debt, good free cash flows, and high expected growth. Trailing PE ratio is extremely high, especially at AMD, but the forward PE is somewhat good with a 27. So I would say that based on this, I wouldn't really see AMD as a big threat. I don't see as AMD even close to NVIDIA. So if I had to choose between the two, I would say NVIDIA. So that kind of drops already one of the three threats that we determined. You remember the AI bubble, AMD, and the trade wars. So we can drop AMD. I don't see it as a big threat based on this. So we only got two threats left, which is the bubble and the trade war. One of which, the bubble, you can argue yourself if you see it as a bubble or not. I would recommend you to read the article by Goldman Sachs if you want to get somewhat extra information. And when regarding about the trade war, well, geopolitics are very difficult to predict, so we can't really make a decisive conclusion about that. So hello everyone, welcome to this new DCF model I've made. I've gotten some criticism on the previous one, so I've decided to update it and add a few variables. As you can see, it's a little bit more complicated than the previous one, but I hope that makes it a lot more reliable and therefore a lot more valuable. Now, of course, keep in mind that this is merely a prediction, so there's no real trustworthiness you can actually put to this, because after all, you're predicting what it could possibly be, what the fair value could possibly be. But so of course you have to keep that in mind. Don't solely base your valuation on this. But as you can see here, we have some data. Expected growth rate is what analysts predict. You can find that on Yahoo Finance. Then the 10-year treasury rate, you can just find that online. The beta is about 1.64. Annual return of market is 8%, which is pretty conservative. We can also take a 10% later if you want to. Equity value, debt value, cost of debt, I've assumed to be 5%, tax rate of 30%. Then we get a WACC of 7.32%, And our free cash flow, just taking the most recent free cash flow and just put that times the expected growth rate for the upcoming 5 years or 5 periods. Our terminal value is the average of the exit multiple and the perpetuity growth, and our average becomes 4.2 trillion. Discounting, we have a discount factor over here, present value of free cash flow and of terminal value. Then the enterprise value becomes 3.3 trillion. Then we get an enterprise value to equity value, and we eventually get an equity value of 3.3 trillion. Shares outstanding 2.4 billion, and we get an implied share price of $1,350. That's pretty high. That shows a lot of upward potential. That is, of course, if the expected growth rate is 93% and the rest of the markets stay on 8% as well as the treasury rate and whatnot. So this is in the best scenario possible. The best scenario. Now, if we would take let's say the previous growth rate, which is 48%, you can find it on Yahoo Finance as well, we would get a share price of $604. So still some upward potential. Now let's say markets do really well and they give us a 10% annual return. We get a fair value share price. It's around this price right now. If we get the 93% together with the annual return of markets of 10%, we'd get $1,250. So there is quite some upward potential here. There's a decent upward potential, but of course we're expecting an enormous growth rate. This is a year-on-year growth rate that's unheard of. Keep that in mind. I would find it very unlikely that NVIDIA will grow 93% year-on-year for the upcoming 5 years. I see that as highly unlikely. The 48% is perhaps a bit more realistic. And you can see that back in the share price, because then the implied share price is fair value. Now, of course, if the competition gets steeper and let's say that the demand for GPUs reduces a bit or they cannot supply adequately and they would grow at about 20%, which is still really good technically speaking, but it would mean that the share price becomes very low at about $350. So keep that in mind, that the entire share price of NVIDIA is based upon a crazy growth rate. That's technically what this DCF model tells us. If you do a multiples approach, well, obviously current PE and EPS, you will get the current share price, which is about $550. Then if you take the PE of AMD, price to earnings of AMD, we would get a share price of 11,000. So that would be a 22x. Now, if you take the forward PE and the EPS expected by analysts in about a year, we would get a share price of $340. So this is basically the forward PE projected by analysts times the earnings per share projected by analysts. We would get a share price of $340. So that was the multiples approach, or a multiples valuation. Now, before we get to the verdict, please like and subscribe if you found this video very helpful. Please like, subscribe, and heck, leave a comment if you have maybe any companies or stock suggestions for the next one. And I'd like to repeat the disclaimer. The information provided in this video is for general informational purposes only and should not be considered as financial or investment advice. I do not provide personalized financial, investment, tax, or legal advice. Any reliance you place on such information is strictly at your own risk. I am not liable for any losses or damages in connection with the use of the information provided. Before making any financial decisions or investments, it is recommended to consult with a qualified financial advisor or professional who can assess your individual financial status and situation and provide guidance tailored to your specific needs. I strive to ensure that the information provided is accurate and up to date. However, I do not guarantee the accuracy, completeness, or reliability of any information contained herein. Please be aware that investing in financial markets involves risks, and past performance is not indicative of future results. Market conditions can change rapidly and unpredictably. By watching this video, you acknowledge and agree to the terms of this disclaimer. Now, to the overall rating. NVIDIA is a profitable, innovative company trade war and AI bubble could pose serious threats, and its business is uncertain and its valuation is very high. Benjamin Graham would call this basically a speculation rather than an investment. But of course, Benjamin Graham was a very conservative investor. It's a high risk, high reward, probably what you would expect from a tech business, but I would say that this is even more than just other tech businesses. For example, compared to Apple, Apple is a way safer bet than NVIDIA. And personally, I would abstain from this company, but if I would have to put a price tag on the shares, I would probably go around $350 US, 340 or 350. At the same price it was 8 months ago. But this is just my personal opinion. I'm going to abstain from this company. I'm not going to buy it. Simply, I do like tech stocks, right? If you look at all my other videos, you would know that. I do really like tech stocks. But the thing with NVIDIA is just the valuation is so high, and it's all based upon 100% growth each year. I find that very difficult to kind of justify paying such a heavy price for. So I'm personally abstaining from this company. If you have other thoughts and you disagree with me, please leave it down in the comment section below. But anyways, thank you very much for watching and your attention and your time. And I hope to see you guys, well, in another video. Thank you very much.